All right. Well, we're going to go ahead and get started. Thank you guys. Thanks everyone for joining us today. My name is Christian Baldwin, Managing Director at Black Diamond Mergers and Acquisitions. I'm very excited to be joined today by Jason Gober. Jason is at Arkansas Capital. He's a loan officer there. The format of our quarterly webinars, we have a 30-minute section of content. So we will be respectful of everyone's time. At 11:30, we will move to about a 15-minute Q&A section of our webinar. So feel free to ask any questions that you might have about anything that we talked about or M&A in general, which is totally fine. And again, we're going to record this. So if you have a colleague or whatnot that you think would benefit from it, we'll send out the link and feel free to share that. So that's just sort of our format. We try to do one a quarter or 4 times a year. We invite guests on just to talk about different topics that might be banking related or deal related and that kind of thing. So again, very excited to be joined by with Jason today here. And Jason, I don't want to mess up or steal your thunder on your bio, but first of all, thank you for your service. I know you served in the National Guard for a while, degree in finance, and have been doing lots of different deals, not only at Arkansas Capital, but at a previous lending institution prior to that, and have a lot of experience with this SBA lending, right? Both the 7A and 504 programs. So why don't you take a minute, kind of introduce yourself to our guest here and give a little background on Arkansas Capital.
Okay. Well, thanks for asking me to be a part of your webinar today. My perspective on acquisitions comes from my 6.5 years experience at Arkansas Capital Corporation and the policies and regulations of the SBA as it pertains to, business acquisitions. Give you a little background on me. I graduated college 10 years ago, 2012 at UCA. I was a father of 2 girls and my wife, and the girls were 9 and 11, but my oldest had autism, and so I felt like things might progress a little slower for her. So I was working at FedEx Express as a courier and decided to get a college degree. So I hopped off my full-time job and went to part-time. So I worked FedEx in the mornings, went to school at UCA during the day. And then because I went from full-time to part-time, I had to wait tables at night at Mike's Place in Conway. Great restaurant. Did that for 5.5 years, got my finance degree, and went to work for a community bank, Eagle Bank and Trust. And then 2.5 years later, came on with Arkansas Capital. Arkansas Capital was formed in 1957 by Governor Rockefeller and other business leaders, and saw a need to transform Arkansas from a more agri-dominated state to an industrial economy. But first, let's talk about why interest rates are rising, and then SBA policies as it pertains to change of ownership. I'm not an economist, but we'd be keeping an eye on everything. Rates are rising due to several factors. The U.S. labor market is tight, supply chains stay stressed. Europe experiencing its first conventional war since 1945, therefore commodities spike. Stressed financial systems from Russia's sanctions, and U.S. inflation has been above 7% for months. Then when COVID hit in late 2019, interest rates were pretty much zero in an effort to drive demand, which gave, but then shortly the federal Paycheck Protection Program rolled out, which gave businesses reserve liquidity, helping demand and increase levels of employment. But then the supply chain issues emerged and companies, could not get raw materials, which drove up prices. Late 2021, the Fed felt this inflation was temporary and prices would come in line. But that didn't happen as quickly. Inflation was 8.5% in July, and this morning they reported 8.3% for August, which was higher than expected. Some are saying these numbers are based on that we can expect the Fed to raise interest rates again. In February 22, Russia invaded Ukraine. Everybody knows that, disrupting European markets, impacting the flow of oil, therefore making gas prices higher. The Fed raised 75 basis points in June, making it the highest single rate hike since 1994. Then another 75 basis points in July. Raising interest rates is a way to the Fed control inflation. Higher interest rates make it more costly for businesses to borrow money through loans and lines of credits. The impact generally ripples through the overall economy. Hopefully this move will slow things down so that prices can get back to normal without sending us into a recession. But the bottom line is the result to borrowers in the short-term rising interest rates increase the borrower's cost for your buyers on acquisitions. Now, Arkansas Capital, we're one of 10 CDCs nationally that provides 7A loans and SBA 504 loans. 7A loans, yeah.
Hey, Jason, just for our guests that are listening, describe a CDC if you would.
Yeah, so we're a certified development company. We're a CDFI, Certified Development Financial Institution. And so our primary focus, we're nonprofit, but we focus on creating jobs. And CDCs are charged with facilitating the SBA 504 loans in each state. Typically, each state has 3, 4, maybe 5 CDCs to help with that. Now, the 504 loan is used to achieve certain community development goals and public policy goals of the SBA.
I always kind of think 504 being real estate involved, and of course 7A non-real estate involved. Is that
correct? Yeah.
Way to think about it.
Right. So 7A loans are used for any purpose, including inventory, goodwill of the business, and working capital. 504 loans are used for the purchase of real estate, essential FF&E, and so typically what we do is we'll split that up on a business acquisition. We'll use the 7A loan for the goodwill and the inventory, and then we'll use the 504 loan for the real estate. It's up to the borrower whether or not they want to finance the FF&E with the 504 loan or the 7A loan. I would kind of lean towards financing the FF&E through a 7A loan because the typical age of furniture, fixtures, and equipment is about 10 years. So you really don't want to finance that over a 20 or 25-year amortization. And for the lender, that, on a liquidation basis, those assets are going to be useless. So, but 7A loans can go out 10 years. Like I said, 504 loans can go out 20 or 25 years. Now, 504 loans, they do require a qualifier. Some of the qualifiers are improving, diversifying, stabilizing the economy of the locality business. That's a neat way of saying that if you're leasing and you want to purchase your own real estate, that's a qualifier. So others are, stimulating other business development, bringing new income into the business. All manufacturers qualify for the 504 loan. And then, there's also, if you're within a redevelopment area or revitalization area. That's a qualifier. An example of that is Fayetteville has the 71B corridor redevelopment plan. And so basically any businesses on College Avenue from the mall all the way down would qualify for the 504 loan. Also expansion of exports, a woman-owned controlled business, minority controlled business, or veteran controlled business, or if your business is located in a rural area. SBA uses the USDA map to make that determination on whether or not the location is rural.
Is the USDA process a separate process from the 504 process?
Yeah. You could either use a USDA loan or the 504 loan.
Okay.
If the real estate's not special or limited purpose, I would use the 504 loan. Plus, the 504 loan gives you a fixed rate option. So on 30 or 40% of the purchase debt. So the way it's done is the 504 loan, we go ahead and get approval through SBA. And then once we get that guarantee for debenture, the bank goes ahead and makes the purchase. And then we take out the bank 40% on the purchase. The borrower puts in 10%. And the bank's at 50% of the total project at a first lien position. So they're at 50% loan to value from day one. And then the SBA portion is at a fixed rate. Currently, the 504 rates are 5.44% for 25 years and 5.343 for 20 years. Now there is a 10-year debenture for long life equipment. And that rate right now is 5.332.
Is that a 7A rate?
No, that's actually 504.
Those, all three of those? Okay.
Yeah.
And those are fixed? Is that right? Is that a fixed rate?
Yeah, they'd be fixed for the amortization period.
I'm sure everybody was writing that down.
Yeah.
Just like I was. But it's funny because right over my right shoulder, we have it on the Bloomberg, is scrolling, and the markets are getting beat up right now today because of the CPI data that came out this morning, right? And it seems like every day we've been on this roller coaster ride of good news, bad news, good news, bad news. And then the Fed just keeps hammering away at we've got to get inflation down, rates are going to continue to rise. Based on all that information, what if you had your crystal ball there? I mean, what do you see in the next few quarters as we wind down 2022 and go into 2023 from a borrower/buyer perspective, which is who we deal with every day, right? We've got these companies, somebody's going to acquire. How do they navigate these waters? Like what might we expect in the next 6 to 12 months? Do you think, based on your experience?
Yeah, so 504 rates are high right now. They in 2017 they were about the same, but then they went down. I think they got down below 3% at one time, but then they stayed in the threes for quite a while. I'd say up to 2020 or half of 2020. They were in the threes, low fours. There was talk this morning about the Fed, based on the inflation rates. Jobs are looking good, but based on the inflation, I mean, they're talking about another 50 basis points to 100 basis points. I hope that'll get us there, and I hope that it doesn't hurt demand. because if it does, we're going to go into a recession. So what I would look for, sellers, it may take a little bit longer to find that buyer. And then also, there's going to be potential problems with cash flowing the deal. We had some deals that got approved in 2021. They closed in 2022, but the rates had gone up considerably. And so cash flow was tight. One issue I'd like to bring up, and I've kind of seen this over the past 2 or 3 years, is that a lot of the sellers are wanting to keep their real estate on the purchase and lease it back to the buyer. But that really puts the buyer at a disadvantage because, if the real estate doesn't make up 51% of the proceeds, then it's a blended amortization based on the use of proceeds. So it could be 12, 14 years amortization without having that real estate or having partial real estate. So that's something that you want to really stress to your sellers, that not sell, keeping the real estate, leasing it really puts their buyers at a disadvantage. So
yeah, that's always a topic of conversation for sure. What do banks currently look for the most, I guess, in the underwriting process initially? What are some things that are just right out of the gate, if you're going to buy business from the lending perspective, things that you like to see?
yeah, so positive cash flow from the selling business for the past 3 years. And then SBA considers every change of ownership to be a new unproven business. So, you need to have an in-depth business plan when you're going to purchase a business, and your projections, so in the due diligence period, they need to get a hold of those financials and, use their develop their projections based on the history of the business, plus what they can bring to the business, and then clearly communicate those revenue and expense assumptions apart from what the business had been running to what they believe they can do and why they can do it.
Yeah. We obviously see a lot of that, and every buyer's perspective is different, which is kind of a neat thing, I think, because you can get creative. I mean, if you have a giant operation and you're going to buy a smaller business and fold it into your current operations, then you might be in a different situation from somebody that's an individual that doesn't have an existing facility and that sort of thing. And so the two financial models can look different for the same deal, just looking at the forecast depending on the buyer's situation. To your point earlier on how rates have impacted, we're seeing some of that too in the loan market, where the debt service coverage ratios originally might be at a really good level, say 1.5 or even 2 times. But as rates go up, that gets compressed. And sometimes sellers really don't understand how that impacts a deal. And we have to spend some time educating them on that, right? Well, now nothing really changed other than the Fed saying the rates are going up. Therefore, that interest rate just ticking up a little bit is going to make that service coverage ratio go down a little bit. What we're seeing is maybe there's a little bit more seller financing than used to be, and some things like that are circulating now. Just still, try to get deals done. Any advice or anything along those lines you might be able to share?
Yeah, if you are needing to go through the seller finance situation, we can refinance that debt 2 years down the road. But you really want to keep track of one requirement is that we show that there's been on-time payments for those past 2 years. So if you're going to do, seller finance, you might want to get an escrow company to manage the payments so that that can be recorded for those 2 years. That's been one pitfall on trying to refinance seller debt.
Well, let me ask you a question about that, because sometimes the 7A deals will say that seller financing, depending on that cash flow, might have to be on standby. So how do you, is that still a rule? And if so, how do you deal with that?
Yeah, so that's a good question. So, they can have, if they don't have the 10% to put down, which is required on a 7A loan, then half of that can be seller debt. But it has to be on full standby for the term of the loan. And it can still draw interest during that period, but it can't be paid on until the SBA note is satisfied. So that's 10 years down the road. A lot of your sellers are retirement age or upper in age, and that's something they'll have to consider. Is, are they going to be around 10 years from now, or how would that play out?
But if I follow you correctly, that's really only applicable when we're talking about that initial 10% equity injection, if you will, from the buyer side, correct?
Right, and
Okay.
it's only on the 7A loans.
Correct.
Mm-hmm.
Okay, yep. So it's not, so if your buyer has 10% to put into the deal, then that kind of takes that off the table, and you can still do a normal seller note that would need to be paid, and then they can be refied every, after 24 months. So, okay, cool.
Yeah.
Got it. All right. Anything else in terms of forecasts or what you're seeing out there that you'd like to share with our audience?
I think rates are going to go up again, but I would imagine mid next year they'll be going back down, hopefully, and as prices come in line with demand. Once supply comes in line with demand, we should have price equilibrium. So I'm looking forward to that. I think the past 2 years it's kind of been, depressing. Although we've done a lot of loans during the pandemic. But yeah, that's kind of what I see. They're gonna go up, and I hope that the reason they're going up, that's actually achieved.
Right. One question I've gotten before, Jason, maybe you can address, is how is Arkansas Capital different than a normal bank? You don't drive around and see, brick and mortar locations necessarily, like you do a lot of other banks. So how are you guys similar to a normal, quote unquote, normal lending institution, and how are you different?
Yeah, so we're normal to any other bank that we can do, conventional loans, SBA loans, other government guarantee loans. But the way we're different is that we're not a depository institute, so we're not a competitor out there. We actually partner with banks, so that we can participate the SBA loan back to them, and then they can enjoy the relationship and enjoy the deposits. During right before the when the Paycheck Protection Program came out, there was a lot of smaller banks in the state that didn't have SBA programs and weren't really equipped for that kind of volume of PPP loans. And so we partnered with a lot of those smaller community banks throughout the state, and we did their PPP loans for them. And I think we ranked 11th in the state in PPP loan volume. So that's pretty good, being that, there's only 22 people that make up our Arkansas Capital Corporation. But our model is to partner with banks that don't have SBA, and then when they have, we educate those banks on what an SBA prospect looks like, and then they send their prospects to us. We'll do the loan, participate half of the loan back to them, and so again, they get to enjoy the relationship and the deposits.
At what point in the process of buying a business should a potential buyer get you guys involved?
So from day one, the thing that takes the longest is the business plan and projections. Everything else is pretty much straightforward. 3 years taxes from the sellers, current financial, income statement, balance sheet, a list of all the assets that are going to be purchased or conveyed in the purchase. That's about it. But yeah, from day one, they need to get on that business plan and projections. That's what I see that takes the longest.
Okay.
And we have resources, Small Business Technology Development Center. There's several across the state, one here at U of A. Mary Beth Brooks is the director there, and they're very good at that, and they're free and confidential as well.
Are there any industry or size limitations to what you guys would look at?
Yeah, we typically stay away from agri and transportation, but any other industry is pretty much wide open.
Is it still a rule that no single guarantor can have more than 5 million in debt through an SBA program? I know that used to
yeah,
be.
so we can do up to 5 million on the SBA loans, and that's each borrower and its affiliates are limited to 3,750,000 of guaranteed funds. So that cap, being that it's 75% guarantee, that caps them at at 5 million. So now the 504 loan, it can go up to 5.5 million on energy projects, green energy projects. But the project total can be as high as 15 to 20 million. It's just that the SBA second won't benefit the bank as much on a loan to value perspective.
Gotcha. Okay, cool. All right, that's great information. Let me turn it over now to our audience. If anyone has any questions they would like to throw out there to Jason or to myself, we'll allow you to unmute and feel free to ask. They able to do that. Okay. Don't be shy if anybody has anything. You must have been really good, Jason. I think.
Yeah, I covered it all. Nailed it, man.
I guess you did. Either that or we put everyone to sleep.
Exactly.
Well, LJ just asked the time frame to close the deal. I mean,
Okay. All right. We have a question that was texted in. Time frame to close the deal. That's a great question. We want to take that one, Jason. What are you seeing from your side?
Yeah.
When we're getting through underwriting and whatnot.
Yeah, we need 45 to 60 days from a complete application. That means business plan, projections, seller information and buyer information. Right now through the SBA 504 loan. So we can approve SBA 7A loans in-house through our lending authority with the SBA. 504 loans, we need to submit those to the Sacramento Loan Processing Center. And they give us updates every week on how long they're taking on approvals. Right now, it's about 13 business days, so about 2.5 weeks to hear back from them. But 45 to 60 days allows us to get those business valuations if it's goodwill, valuations on used equipment, and furniture, fixtures conveyed in the purchase, and then those real estate appraisals. So that's about how long we need. Now, also, there's been a new ALP program through the 504 loan that, and we're an accredited lender with 504. So, any loans of 500,000 or less, we can improve in-house without having to go through that 2.5 week waiting process at the Sacramento Loan Processing Center. Good question.
So appraisal is normal on the 504 side. What about phase ones? Are you guys requiring phase ones on real estate?
Yeah, so part of our application is the environmental questionnaire. So one thing, when we get that application in, we look at that, see if there's any environmental concerns associated with the property. If not, I'll get a risk search with risk assessment, RSRA, or we can get a transaction screen, which gives a little bit more historical data of the property, and they can access the databases. But we only require a phase one when it's an environmentally sensitive industry.
Okay.
Yeah.
Gotcha. All right, that's a great question. If I have another question, Jason? I'll throw one out there while maybe somebody else can think of one. What is the craziest deal you've ever seen so far?
Craziest deal. I used the 504 loan for for a storage unit down in Hot Springs Village, and he was repurposing shipping containers and make them into storage units. The only thing I needed to make that okay with SBA was the manufacturer of the storage units or the shipping containers just had to say that it had a 20-year effective life.
Oh, wow.
Yeah, and that was a pretty neat deal. They're wanting to do 8 or 9 more across the state, and they're doing them in rural areas. But that was probably the kind of craziest one I've done. It did have a green aspect to it because they were, repurposing shipping containers. You travel around the country, you see those shipping containers everywhere. I mean, they're just sitting there. And it was a small debenture. It was about $75,000. The lowest debenture that you can do is $25,000, but we like to stay around $200,000 on our portion just because of the work it takes to get 504 loan done. So,
Sure.
yeah, good question.
Any other questions out there? All right. Well, last call for questions. If not, we will go ahead and wrap it up. Jason, thank you so much for your time today. It was extremely informative. Thanks everyone for participating. And again, just be on the lookout. We'll send out a link once the recording is kind of wrapped up. Feel free to view it again or share it as you see fit. And again, if there's anything that we can do or the Arkansas Capital can do, then don't hesitate to reach out to us, and we'd be more than happy to talk to you about the process of making an acquisition or finding somebody to hand that torch over if you need an exit strategy. It's kind of what we do, what we're here for. So everybody have a great rest of your week, and we'll see you next time.
All right. Thanks a bunch.
Yeah, thank you.